Good morning, everyone. This is Nate G, and we're going to do a training on key levels in which it's advantageous or gives you a better probability of taking a sniper trade and having it work out for you. So, sniper trades are essentially reversal trades out of certain areas. And you can see the sniper indicator down here with signals, both buy and sell signals both ways. But we don't want to, especially if you're using this scalper version, it gives you a lot of signals. And what we don't want to do is just take every single signal. That doesn't make much sense, right? We need to find areas on the charts and where we think there's a higher probability of a reversal happening. And one of the things that comes with the Sniper Pro are these gamma exposure levels, right? And the gamma exposure levels are kind of the first step in those key levels, right? Right now we're looking at Apple. Apple's been selling off all day today, all morning, not all day today, on some news overnight that their CEO is retiring and it's changing hands. That CEO job is changing hands. So while the market is a little uncertainty over that is selling off, I have had a few good put related trades here on Apple. But we're now coming down into this GEX 4 level. These are what I call ancillary GEX levels. There's four of them on the chart for each ticker, and they're going to act as support and resistance levels. Gamma exposure levels are call and put strikes in the options market where there's a lot of open interest, right? And where there's going to be a lot of people. So these levels act as support and resistance because market makers use gamma exposure to hedge their positions. And then when that price gets into that level, it's basically coming into, at the money on that particular option. And that's when a lot of volatility happens, right? When an option strike gets to at the money, and you can have some pretty nice reversals out of those areas. So we're watching Apple here off the GEX 4 level. And as you can see, if we maybe come down into a 2-minute chart, we're looking at possibly getting a buy signal here. Now, Apple's been kind of weak, and the 2-minute signal has not fired. Right? If we were watching that on a 1-minute signal, we would have gotten a buy signal, but it's not a clean buy signal. And what I mean by a clean buy signal is this isn't necessarily the cleanest of buy signals, right? The first one here was too early, right? And then the second one here is just kind of messy. What is a clean buy signal is this one, right? And unfortunately, we weren't into a specific level, at least not one that's on this chart here, but we get the buy signal at the confirmation color change, and then we get a little bit of a bounce, right? So you could have gotten about 10 to 15% on an Apple call there, let's say. On a very clean signal. This one's a little messy, and now we are moving down below GEX 4. So that level didn't work, right? It wouldn't have worked. And if you had taken along there, you would have been stopped out. One of the things we have to be careful with when we're playing off of levels, like every level isn't going to create a bounce. This one stopped for a second, and it rejected, but it just sort of pushed down through that because this is an ancillary gamma exposure level. And they're not going to have the same sort of effect on price that something like the call resistance or the absolute gamma level has, or if we go a little lower, put support down here at 260, right? those levels are going to have or should have much more of a reaction than some of these, especially when price is moving quickly, than some of these ancillary levels. So when we're looking at these levels, that's kind of like step one of looking at sniper trades. Is the first thing we're going to look for are where are the gamma exposure levels, and is price coming into that level, and is price looking like it's going to react with a buy or a sell signal, right? This works to the upside and it works to the downside. Another thing that we can watch with gamma exposure levels, this is the SPX gamma exposure level. And we've come down in here with a sell-off in the market today, and I'll talk about this red line here in a second. These larger gamma exposure levels, especially absolute gamma, as long as this stays the absolute gamma level, this is going to act as a magnet today, right? So, obviously news trumps. Obviously news trumps any level that's out there. But I would not be surprised if this red level here that I've drawn, the recent low, and I'll explain that one in a minute when we get to the other levels. If that holds, it wouldn't surprise me if we start to work our way back up towards that 71.50, right? And these get updated at 1:30 Eastern time, and that may no longer be the absolute gamma level, but for now it is, right? And so not only are these sort of support and resistance levels, but they can act as magnets for price as dealers start to hedge, market makers start to hedge their positions. If we're in a positive gamma environment, hedging happens in sort of an opposite direction. So if we're in a positive gamma environment and we're moving up, market makers need to sell positions to hedge, right, to become delta neutral. And then so you get this nice smooth movement generally, right, in a positive gamma environment where there's no news. If you're in a negative gamma environment, market makers have to hedge in the same direction that price is moving, right? So if price is moving down, market makers need to hedge by selling, which just creates more selling. And then when it bounces in a negative gamma environment, you get larger outsized bounces because now they have to buy to hedge in the same direction, right? And so that's where it's good to know where this zero gamma level is and whether we're in a positive or a negative gamma environment. But if we can hold this level and bounce, and then at that 10:30 update, this level up here, 71.50, is still the absolute gamma level, I'm guessing it's probably going to shift into this, 71.10 like yesterday's close, or 71.05 level now that price has come down and is sort of going sideways. That's my guess, but we'll see at that 1:30 time frame. So the first level that I like to look at is, are we coming into a gamma exposure level, right? Okay, one of the other things that we look at is volume profile, right? Or VRVP. So if we go to our Apple chart and we look over here, let me get rid of this drawing. We look over here on the left side, we are getting volume profile, right? And you can see sometimes volume profile will really line up with a gamma exposure level, sometimes some of the larger ones. So this GEX2 level up here, right, for today, it lines up perfectly with this point of control level on the volume profile. The volume profile is this red and green lines on the left side of the chart. Volume profile shows volume at price. So down here you have a regular volume chart, which is volume by time. And then volume by price shows you key levels where buyers are at. Now the difference is volume profile shows you the actual underlying stock purchases, the volume of stock purchases, right? And the gamma exposure shows you what the underlying option market is doing. So in many cases they can be similar, but also they're going to show different levels that the option market is going to try and affect, because market makers are using options to hedge their positions, right? Whether they're option positions or their stock positions, right? So these levels become pretty important. Now, on volume profile, the areas that I tend to watch are these large nodes that stick out, right? So we call those the point of control for each volume. When I talk about these, this is a value area, right? This, I'm drawing the box, the value area box there. And then the line in the middle is the point of control. So if we're at the point of control, that's usually going to act as a support or resistance level as you come into it, right? And other support and resistance levels for a volume node, right, are going to be the value area high, which is the top of that, and the value area low, which is the bottom of that, right? So price will react in there. It'll come in, you'll hit a value area high, it can reject, come down to point of control, maybe push through value area, and then retest and go. That's how price moves within a volume profile node. So if we can find a level, like for instance, Apple is just now coming down into the base of this volume profile node. And if we see, I'm on a 1 minute chart now, let's go to like a 10 minute. If we go to a 10-minute chart, right, we have a number of point of control levels. And let me turn off gamma exposure for a second, right? So if we draw these lines here, right, get 3 sort of point of control levels in this larger node. But what we're coming into right now is a value area low, right? If we're counting this whole node here as a VP node with multiple levels of volume profile in there. And you can see this is also where we topped out a couple of days before our gap up on Friday. And this is the bottom of that gap up area, right? So this was the low of Friday before we continued our move up, which we'll talk about here in a second. But from a volume profile perspective, we can see that that is a value area low. Did I just? I did. I was trying to get rid of this, but I got rid of my volume profile. Because I got to do that. There we go. So a potential for a call here on Apple is this lower level, this value area low. Okay, so let's look at some other charts and see, you can see this call resistance level on gamma exposure right here on Amazon at 252. You can see that it's also a massive volume profile level, right? I would expect Amazon to just continue to chop around this level. If it gets above it, it comes down to it. If it gets below it, it comes back up to it, right? These levels are pretty key as we start to look at these names that are moving. So what I need to do is find some names that are moving a little bit more. So Microsoft. Okay, you can see this level that it's chopping around right now. If I get rid of the gamma exposure, I can draw a point of control level right there in red. And then if I come back out and I add that, you can see that that and that 425 strike are very close together. And so I would expect price to react off of those levels. And as you can see, if we get really granular here in Microsoft, right, we've bounced off of the VWAP area, came right into that level, rejected, pushed above that level, then we kind of chopped around it, but you can see we pushed up, we've retested it, now we're pushing up some more, right? And these gamma exposure levels, while that's exactly 425, and now that we're in closer, VRVP or VP stands for visible volume range profile, right? So as I switch out to larger time frames, I start to see more information, and that VRVP can change. So for instance, if I'm only showing this much of the chart, right, the levels down here, you know, that there's another big level here at the put support. But as I start to scroll out and I start to show more and more and more data, those levels will switch, because it's going to show me for the range that I am visibly looking at, it's going to give me those volume profile levels. Okay. And this GEX4 level here is very big, and this lower level is actually, when we see a little bit more data, is actually just a little bit higher. D-Man uses volume profile almost exclusively. That's who I learned it from. And it works great. It works great when you're trading snipers. It works great when you're trading like a TPS style. It works great when you're scalping. And that's another way that, you know, if a sniper is coming into a point of control level, but it's not a gamma exposure level, I'm still paying attention to that, because I would expect that their price is going to react off of that. And if it's a level that I think price is going to react off of, then I'm looking for a signal off of that level, right? What I don't want to do is get in the habit, if I like to trade snipers, of just taking sniper trades in the middle of no man's land, right? Which means there's no gamma exposure level, right? There's no volume profile level. I don't know why I just did that. Hang on. Tried to turn this on. There we go. And there's no chart level. I'm usually going to ignore that level, right? It's just trying to take a trade in the middle of nowhere. Price is just probably temporarily reacting for a second, and it's not a level in which I have a higher probability of price reacting off of. Okay, so the first thing is GEX, gamma exposure, right? The second thing to understand is VP. I've also done a lot of lessons on VP. They're on YouTube. You can watch those or listen to D-Man talk about anything he's done, because he's the VP master. Look, price is now reacting off of this level down here. And the last one are chart levels, okay? It's really hard to write with a mouse, right? But we have chart levels. And this is the third in this category of important levels to be able to watch. And chart levels and chart reading are kind of a skill that if you're getting into trading or you're new to trading, that you should probably focus on trying to master, okay? And Apple is coming off of one of those right now on this bounce trade, okay? So if we were watching, you know, let's say this 3-minute chart into this red line that I drew here, and we're getting a signal, this would be a place to potentially take a trade. Also, if we look at the level I was talking about a little earlier, and let me get rid of the gamma exposure, this recent low level, right? We've bounced off it or thereabouts, right? Once and now twice, and we've formed a little inverted head and shoulders here. So I'm expecting this thing to break up, and I can do lessons on chart patterns to watch, you know, inverted head and shoulders, those things. Inverted head and shoulders is a bullish chart pattern. But this is what I call what is called, it's not my saying, is a chart level, right? And learning to mark up your charts this way, can anyone tell me, this is also similar to the Apple trade that we were just looking at here, right? This red line here. What is this before I pan out at 70.83? What is that? Does anybody know? If I go to a 10-minute chart, yeah, it's the low of the day, but how did I know that was going to be, or potentially going to be, the low of the day? Right? If I scroll out, all right, this is the SPX chart. Oh no, don't do that. Don't do that. Don't do that. I just wanted to get rid of these guys here, so they're not kind of clogging up your view. Right? This is the low of our gap up on Friday. And we came in yesterday and we hit that. I bought a nice sniper call play off of that on a 1-minute chart. Right? But we've now formed 2-3 touch points. And, you know, if you kind of give it a little bit of air, a little bit of space, 4-5 touch points, right? So this is essentially, it was a double bottom. Now it's a triple bottom, or quadruple bottom, depending on how many times you want to say that it touched. But when you come into key chart levels, price potentially will react there. Sometimes you'll get a little washout where market makers will try and run stops. But if you see that happen at a key level, right? If you see price push down and then immediately regain, that's a bullish sign at a key level. And you can probably expect that if you get a signal on your chart, which, you know, if we go back out to like a 2-minute, you know, we got a signal here, as you can see, right, for that first bounce. And you can play these multiple times because they don't always continue that movement. We got that. We got a clean signal there on a 2-minute. We got a nice bounce. Probably could have got 30-40% off of that one, right? If we're watching that chart again, right, there's more signals. This signal here, not a great one, right? Because we're not at a level. This signal here, great, because we are at a key level and reversing. Okay, so this is support right here for this chart. So that's one chart level that also works to the top side. Let me see if I can find a top side double top here. We're just coming into one right now, or we just did in Microsoft. You see this level here on your chart. We made a high here, and then we came up and we just tested that high there. We actually pushed up and through and then rolled back down to this point of control gamma exposure level, right? So, and we got a signal on this one because we were overbought. If you were on a scalper, you clearly got a signal here, right? On the scalper setting, which I can change to and I can show you. But you might have missed it because it wasn't a key level. Yeah, you do. You get a signal right there. But that one was a little late and it wasn't off of a level. So if you're new to sniper trading, I recommend only taking signals that are coming off of levels, right? So that level that we just looked at would be a double top, and you're going to see some price reaction off of that. So you can expect that as it comes into a previous level. I would also be drawing a line up here on Microsoft, and if we worked our way, if price worked its way back up here and then looked like it was stalling, and then we got a signal here for a put trade, I could play a put trade coming out of that to the downside, right? You need a level and you need a signal, right? So other ways chart levels can show up, this is a great example. So we have support and resistance areas, and then one of my favorite trades for snipers is a VWAP test. Okay, so that came into VWAP. We got a very clear signal right there. Boom, that would have been a great trade. 30, 50-ish%. And really, you're trying to take these trades from one level to the next level, right? So you take your trade here off of this signal, you ride it up into this gamma exposure and point of control level, right? And you take it off. That's, I don't know, Microsoft, it's going to be maybe 15%, right? Unless you bought that a little late, right? Just like if you took a trade here, you're going to flip it out as it comes down into here. Right, you're trading between the levels. So VWAP trades, if you're trading above VWAP, right, you're above VWAP here all morning, and then we sell off into VWAP and get a signal, that's going to act as a support level. And conversely, it works the other way, right? If you are, and I don't know if I'll have an example of that today. But if we were below, here you go, here's NVIDIA. This is a small trade, but you can see, right, NVIDIA is trading below VWAP. We get a bounce, and we come back into VWAP, and then we get a scalper signal, right? On the regular reversal, you're not going to get this signal because it's not overbought. But a rejection of VWAP after being below it for a while or above it, this would be a put trade. Ride that for, 10 to 15% right there. So the levels we're looking at for taking these trades are not just anywhere in the middle of nowhere. You could, okay, I'm getting a signal there. Looks like I'm getting a reversal there. I haven't looked at VP. Does this look like a good VP level? Not really, right? It's just sort of in the middle of nowhere. So if I'm a beginner, like if I'm experienced and I'm a scalper and I want to take this for a quick 10%, flip it out, my stop is real tight, okay, right? I could see that. But if you're a beginner, wait until price comes into a level, right? That's what we're looking for. So we're looking at GEX, gamma exposure for major levels. We're looking at VP, particularly the POC, right? And we're looking at chart levels. Those are the three key items or key levels that we're looking to take sniper trades off of. And if we're smart, if it's not in one of those three levels that we know and we understand, we're going to leave it alone. It's a no trade, right? Because there's plenty of trades throughout the day. Why take one off of just nowhere and chop yourself up, right? Even see this one comes all the way up in. We get an initial trade, put trade, kind of goes sideways for a minute, and then we get a confirmation with a bar change, right? Just ride that down into VWAP, 10, 15%. Does anybody have any questions on that? That's kind of key and something we don't necessarily do a lot of lessons on. It's 1 through 4. Yeah, Coach Bill. And, one is obviously larger to second, three, third, fourth, right? In terms of total amount of gamma exposure at that strike. And then the big ones, call resistance, absolute gamma, put support. Those are the biggest levels, and those will have the most reaction. In theory, right? If there's news or there's a massive sell-off, I mean, they're going to blow through those levels as well, right? That, selling pressure is really, if everybody's selling and institutions are selling, then, those levels are just, you might see a small bounce, but they'll just blow through them. So you also got to kind of watch the ticks, the levels that we're looking at, even the recent low levels, support and resistance levels. If ticks are down here at minus 1,000 or they're up here at plus 1,000, there's not much that they're going to do. Price is just going to do what it's going to do. So just be aware of that. How do I get the GEX levels to show on the right of the bar? You mean the names of them? Is that what you're talking about? Harry, yes, I do. Those are just on there. It's part of the service, part of the what do you call it? It's just part of the gamma exposure indicator. If they're not showing on yours, scroll a little to the left, like this. Yours probably look like this, right? If yours look like this, just grab it and pull. I've that very question that you just asked. You are not the first person that has asked me that question and has not realized that their expansion area needs to be a little bit larger to see it. So don't feel stupid. You were not the first, and you certainly won't be the last. Any other questions before I shut off the recording? Kavi, you have a question? Yeah. Ask again. What do you got for me? On the VRVP volume profile, the way I do that is by looking at, so let me, here. So SPY will be a great example of that, but I have to do it on this. So hold on a second. Let me load that up. Okay, so let me get rid of GEX. Okay, so right here, we're looking at the SPY chart. SPX doesn't have very good gamma exposure. No, I'm sorry, VRVP. I can get my level names correct in my brain. So if we're trading today on the SPY and I am looking at maybe potentially the value area low here, right, as a bounce spot, which we had shown a minute ago on the SPX. I only need to look at these 3 days, right? Because below that, there's just open air. Now, if we started to break down below that, and I wanted to see, okay, where's the next level of volume profile where we might see a potential bounce, right? I need to look further back. So if, let's say, price had started to break down here, I'm going to go and and I'm looking at just this. And I could be looking at this on a 3-minute chart. I could be looking at this on a 10-minute chart. There's just more detail the lower the time frame you go. But it's the same, right? I only need to see right here because that's the only volume profile that matters. The traders that have been trading over these 3 days, right? If price, for whatever reason, breaks this level and starts selling off, this volume profile here isn't going to tell me jack squat, right? Because we're not trading against those traders anymore. We've broken down. So then what I need to do is go, all right, well, I need to start seeing more chart. And because this was a recent high, I don't have to go back very far because I'm only worried now about these people right here. All of these traders right here are going to reject, potentially bounce off that first line. And then if that first line fails, this second line here, right? So you don't need, so if I go, let's say I go out to a 30-minute chart, right? And I see all of this volume profile for like the last 10 days, right? And I'm trading today. Do I care about this VP, this yellow? Oh, I tried to make it a yellow line. Do I care about these traders right here? That were trading right here? Am I worried about them? Or do I need to know where those levels are? No. Right. The only thing I need to worry about right now is this. And this. If price starts really selling off, right? If we get a pullback, then yeah, sure. But that's how you kind of decide how much of the chart you need to look at. Small potatoes, there's a link somewhere in here. I guess I'll put it in here. Hold on. I think it's oh, thanks. John always beats me to it. Thank you, John. Appreciate you. Someone asked, Kabi, you were asking a question and then somebody else got me. Oh, I'm glad you like the GEX levels. Yeah, they're really helpful, especially when you're trading options, and especially 0 DTE options. Okay, you said, can I ask again? And then you didn't ask again. AXTI on my chart, like on this chart, yeah. What time frame? On the daily? And you want to see like a reversal sniper? Yeah, daily reversal sniper. We are getting into the oversold, but we don't have a signal yet. And we don't have a fire signal yet. RD, yeah, I can. Generally, the general rule is on setting stops. Let me go to Apple. the general rule on setting stops is, let's say you took this bounce on Apple. Apple's just so weak today. Off of this chart level that we drew, right? So I can even back you up just a little bit, right? So let's say you decided, okay, I'm going to take this 2-minute signal, or what did we have? We had a 3-minute signal that was kind of clean. Okay, clean 3-minute signal. I'm going long right here. I'm buying Apple calls, and I'm looking for a 2-to-1, at least a 2-to-1 risk reward, right? So we're here. Oh, why didn't that? Weird. There we go. Right? So there's a 2-to-1 bar, right? So we buy calls here on this signal. Bar closes. We like this off of a very key level. And now we need to set our stop. Well, our stop should be a break of the swing low, that yellow line. Right? If you don't trust yourself to make that stop, then you can just put in, a percent loss stop. There's a way to do an OCO order in Thinkorswim where as soon as you put on the trade, it puts in both a profit target at whatever percent you set and a stop target at whatever percent you set. And whichever one it hits first, it'll cancel all the others. I did that for a long time when I first started doing these, because my issue, and I'm going to sound like I'm talking to all of you here, like I'm looking over your shoulder, is as this starts working against me, I think, oh, well, it's broken, but I don't want to book the loss because, God, I see this level down here and it might bounce off of that level. Maybe I can add there and save the trade. And then, all of a sudden you're just out. You're down here and theta's killing you, and you've lost 50%. Right. It sounds like I'm looking over your shoulder, because every single trader that's learning to trade, I still make this mistake sometimes, and I have to kick myself in the face. I'm very flexible, and I have to turn my computer off and be like, why did you do that again? Right? Because sniper trading, it all happens so fast. You have to have the discipline, if it's not working, to cut it. It's okay. There's going to be 15 other potential trades throughout the course of the day, but you can't trade hoping that thing's going to come back, because let's say it does this, then it does this, and you add and you're like, oh God. And then 2 hours later it does this and it comes way back up here, but because of theta decay, up here you're taking it off for break even, where you could have taken little cut, right? I'm losing $50. I'm losing $50, or however many you're trading. And then again down here, and I'm making $300, right? So 200 profit, 3 tries, right? Instead of 0, and then you've wasted all the mental capital of the last 2 hours for that to happen, where you could have found 3 other trades in different names, right? So when it's not working, it's not working. And if you don't have that discipline yet, I recommend setting a stop. And, if it comes down and it takes you out, okay, you reevaluate, okay, are my stops too tight? Did it work? But just let the trade do what it's going to do, and then you can learn more without losing a lot. That's my recommendation. Some people have to lose a lot to learn. I know I did. I am a learn by doing kind of person. You can tell me 25 times what to do and how to protect myself, but I gotta go and learn it the hard way. Two to one or better. Yeah, 2 to 1 or better is my general. If I'm in a trade and it looks like it's turning, I might take it off for a 1 to 1 risk reward. I'm like, ooh, that's going to turn. I'm going to take my profit. Sometimes I'll move my profit stop up. So I'm protecting some profit. So let's say, uh, let me. Let's say I took a put trade on this rollover right here, right? And I get up 25% or even 15%, but I think there's more. I'll come in and I'll move my profit stop from, let's say a 10% or 15% loss, right? My previous profit stop was at a 10% loss in a put trade or a call trade. And then I get up 10 or 15%. I might slide that to break even. And then as it gets up to 25, 30%, if I think there's more in it, I might slide that again to, 20% plus 20%. And then if it keeps going, I'll kind of slide it, and then it'll kind of bounce and come back a little bit, and it'll take me out. But I keep protecting that profit if I think there's more in it, right? If ticks are reacting, if there's a massive sell-off, if it's a put, or if all of a sudden ticks come up here to plus 1,000, I'm going to give it some room to work. Yeah, it's kind of a manual. It's kind of a manual trailing stop. You can also set OCO orders to give you a regular trailing stop, but I've always found that those are so just by the numbers that I do better when I feel it, when I'm feeling it. If that makes any sense. That risk reward does not exist in toss, but you can. It's so easy to do yourself. Yeah, Gnome Trader. Once you update, right? So it's not going to show you right now, but once you have the latest version, that update script is not going to show. When you pull it down and it does show, that means there's a new version. Okay, I'm going to jump off here and try and get this training posted up to YouTube. But I hope that was helpful for everyone that does the snipers. And I'll probably try and come on next week and do, show that trailing stop and stop loss and OCO order stuff, because I think that would be pretty advantageous for a lot of people. So I'm going to put Nate's screen back up, and then, but I'll be around in chat all day. Why wait until next week? I try to do a longer session on Tuesdays, right? So that's what I'll do. Okay, talk to y'all later.